Setup number 9 is manage asset books. Let's go to the system and see how the navigation works. So setup and maintenance, and then offerings is financials. The task we put in this field is called manage asset books. And when you click on this, this screen shows, and the corporate book we are going to talk about is called US Corp. US Corp, when you click on it, it looks like this. It's got the main region, and then it has got 4 tabs. We will go through them one by one. So name of the book is US Corp. Book class, or there are 2 possible classes, corporate and tax. So for this is a corporate book. Our ledger is, or GL primary ledger is US primary ledger. Depreciation calendar is Vision month calendar. Its parent fiscal year is accounting cal year. We are using the same prorate convention, prorate calendar as the depreciation calendar. And the last period that ran was November 23. So right now it's in December 23. Fiscal years 2023. These fields are self-explanatory. Now I'm going to talk about a couple of account-related setups. So this is the account default. So I'll just give you an idea of how this works. When you are doing the depreciation of an asset, the depreciation engine looks at different fields to decide what the depreciation account combination will be. It looks at the assets assignment screen to see the company code that the asset has been assigned to, and then it looks at the category to decide what the depreciation account will be. So that takes care of 2 of the 6 segments in the depreciation account combination. The rest of the 4 the value for the rest of the 4 is picked from here. So segment 2 in the depreciation account combination will say 10 always. Other 3 will always be 0, 0, 0, 0, 0, 0, 0, 0, 0. Then some of the accounts here, this one is if you decide to retire an asset, it's, and there's a gain. Then if you retire an asset through a sale, then if there is a gain, it goes here. If there is a loss, it goes here. Then in this area, we have 4 tabs. I'm going to go through the reference data groups first. So this is a functionality. Reference data set is a functionality that's available in many modules in Oracle Fusion Cloud. And here it's being used to share the different setups across set of books. So for example, if you have defined a couple of customized depreciation methods and you have got 5 or 6 books, corporate books, and you want to only, let's say you have defined 2 new depreciation methods and you want them to be available just to your US Corp as a corporate book and not to the UK corporate book, then that depreciation method or those 2 depreciation methods, you assign them enterprise set, reference data set. And here you say reference, in the reference data set, you say enterprise set. They will start appearing if available for this particular book. And in the UK book, maybe you can use the depreciation data set called enterprise set UK. And if you define a couple of other methods, custom methods, they will show up in the UK corporate book and not here. So that's the idea behind reference data sets. Then we have revaluation related setups. Revaluation is usually done for real estate fixed assets because their value, they have a long-term life and the value can change. For example, if you bought a land in 1900 and after 50 years, the price of the land will increase many folds. So showing its historic cost is not practical. It would make more sense to have the market value on the balance sheet. Advanced rules. So I'll just explain 1 or 2 here. Allow group depreciation. So group depreciation concept is if you've got multiple assets of the same category, let's say you bought a furniture in 2001, then another couple of chairs in 2002, then another couple of let's say tables in 2003, you can group them together as a group and depreciate them as one. So that way it will show a single depreciation figure every month rather than 5 or 6 different depreciation amounts. Invoice rules. So fixed assets among the sources that it gets data is Oracle payables. So if you are bringing data in from Oracle payables module, then these setups play a part there. I'll explain to you these three fields. In the AP invoice, if you have a clearing account combination and the natural account over there has to match with the categories natural account. And then when you use the mass additions process, that natural account determines that using the category setup, which asset book that particular invoice line should go to. So natural account of the AP invoices expense account matches the categories natural account of the asset clearing account, and the book associated to that category is going to end up getting that asset. If you click on this field as well, then the uh, company code and the natural account of the invoices charge point account is going to be matched against the categories, company code, and natural account combination when deciding which book it needs to go to. Same here. If you want cost center and natural account to determine which book it needs to go to, just like this one, you need to the mass additions process is going to look at the combination of cost center in the invoice expenditure account and the natural account, and then it's going to check which category has this combination available and move that line's amount into that corporate book. We are now going to go to the tax book. So the sample tax book that I'm going to refer to is called US Federal. So these in the upper region has almost the same fields. Here the tax class will be tax. Earlier we showed you the corporate book. There it said corporate. So in this region there are 4 tabs just like the corporate book. The other 3 are same as the corporate book, but instead of the invoice tab, it has the tax tab. And in the tax tab, you will notice it talks about a mass copy. So if you have a corporate book, the data comes in using the mass additions. But when you are talking about the tax book, the data comes from the corporate book and the process is called mass copy. So from AP, data comes in through mass additions. From the corporate book, the data comes to tax book using mass copy. These are the different options available when you're using the mass copy process. Thank you.